go ahead and kick it off. Happy Tuesday, everybody. My name is Aaron Kona. I'm the co-founder, managing director here at BWG Connect. We're a giant networking and knowledge sharing group with thousands of brands. We do exactly that. We network and knowledge share together to stay on top of the newest trends, strategies, pain points, everything that's shaping digital as a whole. And when the same topics or new topics come up over and over again, we host an event like this. And so a couple of housekeeping items we get started. We're starting a few minutes after the hour. Just so everybody knows, we're going to try to wrap up 1 to 2 minutes early as well, give you all plenty of time to get on to the next meeting without being late. We want this to be as educational and informational as possible. So at any point in time, if you have any questions, drop them into the chat, drop them into the Q&A, and we will make sure that we get those answered as real time as we possibly can. And I think that's about it. I spend a lot of my time just talking to brands, try to make it 20 to 30 a week, helping them out with digital strategy as a whole. And, some interesting things have popped up lately. One of them is around network tokenization. And so, John, I'm going to kick it over to you. If you want to do a brief intro on yourself and the organization, that'd be fantastic. And then we can kind of get into the topic for today. I'm sure we're going to have a ton of questions on it. Or the opposite, where people are just going to be sit back and really, really learning. And then the next one of these we do, there's going to be 150 questions that pour out. But I'll kick it over to you, John, if you want to jump in.
That's great. Thank you, Aaron. So I'm John Lunn. I'm the CEO and one of the founders of Gravy. Gravy is a payment orchestration platform, which means we're a technology layer that sits between retailers or merchants out there and pretty much every payment option in the world. So why network tokenization? Why are we talking about that? Is because we support network tokenization across the 120 odd payment companies that we're connected to. That should make things a little bit easy, and we've been in the deep end of this as we've integrated network tokens across our merchant base.
Yeah, awesome. So again, reminder, I'm going to turn on the chat here so everybody can interact. But also, if you have any questions along the way, don't hesitate to drop them there, or feel free to drop them into the Q&A as well. But I mean, do you want to just start us off around what is network tokenization as a whole? I think as we get deeper and deeper into the digital side of commerce as a whole, more and more questions pop up and people start peeling back the layers of the onion and realize, wait a minute, there's 150 things I never thought of, and this is probably one of those things for sure.
Exactly. So probably useful if we go back in history a little bit. So in the good old pioneering days of e-commerce, merchants used to store raw credit card numbers all over the place, right? And that meant that you had people's credit card numbers in Excel spreadsheets, sticky notes, etc. And obviously that caused a few problems with cards being leaked and hacks and everything else that came with that. So what happened is the industry introduced the PCI standard, and the PCI standard was like a standard you had to meet in order to be able to store raw credit cards and not get fined if something went wrong. So you would have to go through an audit, et cetera, et cetera. And a lot of merchants didn't want the complexity of that because it is a lot of work and it's an expensive audit and you have to do it every year. So what they decided to do is basically use a technology called tokenization. So you work with a third party, and it really is just like the tokens you get if you went to a casino in Vegas, right? They don't give you cash, they give you a token to replace it. Same concept here. You send a card through to payment service provider, they return a unique value to you, which is a token. And if you want to bill that customer going forward, instead of having to store the card number, you just say bill token 1234 for $50. And that made the PCI burden that you had a lot lighter and made things a lot more efficient with a lot less hacks. The next sort of iteration of that is network tokens. And really, this is a problem we all experienced here. So you've got your credit card probably stored on a variety of different subscription merchants at the moment. So things that you've signed up to, they've got your card on file, etc. And probably some stage in the last 3 years, you've got a call from your card company saying, oh, sorry, we've identified a transaction of someone buying a laptop and Amazon, whatever. And so we've canceled your card and we're sending you a new one. And you then spend the next month and a half trying to remember where the hell you subscribe to as your dog food doesn't arrive because they've got the old card, et cetera, et cetera. So for a consumer perspective, it's very, very inefficient having one card number, one piece of plastic being stored across the internet by whatever retailer you decide to sign up with. And then for the card associations or the issuing banks is also very inconvenient because every time they have to do this, they have to generate a new piece of plastic to send to you. Lots of transactions fail, lots of merchants have problems, et cetera, et cetera. And so the idea here is instead of merchants having to store a credit card number for you for a transaction, you make a call to one of the card associations through a company like Gravy, and what they return is a unique token that's generated by Visa, MasterCard, Amex, etc. You store that token, and that token is for that card user, for that card number, for that merchant only. So all those things need to combine. And that means if someone else has a different network token for the same card and they get hacked or lose it, all the card associations have to do is switch off that token. It means the same token, the other tokens that all the other retailers hold will continue working. The consumer won't be impacted, and hopefully they won't have to issue a new plastic card. So overall, it's very sensible. It allows a lot less waste in the system. It also means you're more likely to keep on, preserving that customer who doesn't cancel the subscription because they forgot about it, etc. And it makes a better system. However, on the other side, it is a little complicated to manage, right? As a merchant, it's a brand new thing you have to do pre-transaction in order to take advantage of this. So it's added a bit of integration burden to merchants, but overall, it is a sensible thing to be doing.
Yeah, so how prevalent is this today? And then where is it going to? Because I know that's where a lot of people are concerned, right? And then how big of a lift and everything else, because we're all inundated with so many different things right now that are on our plate.
If you talk to the card association, they would expect 100% of transactions to be running through this at some stage, especially e-com, network tokenizations. They believe this is the future. This is where it should go. I don't disagree. I think this actually is better for the ecosystem. So, you should plan around this being the standard way of you processing transactions online in the next 2 to 3 years. It's building momentum. It's building fast. There's new things being rolled out by Visa and MasterCard, like Click to Pay, which is a big deal. And that uses network tokenization. So it will become very, very common very quickly. I think the other side of this is if you haven't already, if you're not using it, then the banks in some countries are going to start putting your interchange up, and that's already starting to hit some US merchants. You'll be paying more if you're not using a network token. And in some other countries, they're actually discounting if you do use a network token. So depending on your acquirer and region you're in, there is definitely financial incentives to use this.
Yeah, so a quick question comes in. Can you describe the fee structure? Because someone pays for the network tokenization, correct? Customers already pay for bank fees, merchant fees, transaction fees, et cetera, et cetera.
Yeah, so there is a fee to generate a network token, and that fee is generally going to whoever's connected to Visa and MasterCard and generate it, and they're paying a small fee to Visa, but then you're also paying for the use of that technology. So if you're going through a third-party provider, whether it's Gravy or anyone else, then that third-party provider will be charging you to use that service. The alternative is you build directly to Visa and MasterCard, but that is incredibly difficult to do, and I wouldn't suggest it.
Is there like a test and learn then? Like, I think the big question that people have all the time is, because this is something new, it does make sense. I think from a personal consumer standpoint, it makes complete sense. But from a business bearing the cost, and then I guess in the end, passing the cost on to an end consumer, like, is there like the benefits, I guess? Is there a way to test it out?
Absolutely. You can switch on. So something like with us at Gravy, something you can do is you can force some transactions through using network tokenization and others not. So do basically an A/B test. But you can also try a network token, and if it fails, you can fall back on a direct PAN. So we've built in a whole variety of different rules that you can use in order to test this process without losing that customer. And that's really the big thing. The big advantage for a merchant is every time someone has their card stolen or expires or whatever, there is a very high chance that they won't go back and resubscribe to your service. It gives them that minute to think of really do I need this product, because you are forced to go back into it and rethink your strategy there. So I think it is definitely beneficial for a merchant if consumers aren't constantly being asked to go back and add a new credit card number and all the rest of it. And there's a potential you'll lose months of revenue while the consumer doesn't realize they haven't renewed or they haven't updated their card on your platform. So, with me recently, I had exactly the situation. I have something that's delivered every 3 months. And I got an email a month later saying, oh, sorry, we've canceled your subscription because your card expired. And I'm like, well, why didn't you ping me? Why didn't you ask me? So they've lost a customer. And I think that happens more often than not.
Is there, like, how fast is this going to be changing? Is there a point in time where this is pretty much required?
Yeah.
And then, what's the drawback if people say, hey, I want to punt for a year? I guess is kind of what I'm trying to come up with the questions. And again, TJ, thanks for dropping the question in there. If you have questions around this, drop into the chat or the Q&A and we'll get them answered. But those are the ones that are popping up through my head.
Yeah, no. So this has been ongoing for a few years now. I think this is the year where it's going to become the main way to make payments. So for the last few years, there's been experiments, some early movers in this space. But now that the financial incentives have been put in place, then I think it's time right now to take advantage of this, because I think if you're not, you're going to be paying more to your acquirer, and you shouldn't need to do that. And who wants to pay more in this climate, right?
Then if we talk a little bit about like implementation costs, time frame, all of these things, issuer support. I mean, these are other things that pop up all the time. We've already got 150 things running on the back end that we have to attend to. Would love to hear what the lift is as a whole. I know there's a monetary side, right? And so there's a temporary, I'm not going to be paying more, but I probably will. So in the meantime, if I'm trying to figure this whole thing out, what does that all look like? What does it add to my team?
Yeah, I mean, there's a number of different ways to do this. If you work with one PSP and you're happy to work with one PSP going forward, there is a good chance they're already using network tokenization in the back end and swapping that out with their own token, which is what they're getting for you, because that unfortunately makes you very stuck with that PSP. I think if you're thinking about it now, do consider an orchestration platform, because the token you'll get back for an orchestration platform is more portable. So it doesn't lock you into a particular PSP. So there's there's a huge amount of transactions already running through network tokenization. Probably if you're using one PSP, there's a good chance that they're using a network token in the back end. But having the advantage yourself to be able to control that, being able to have a network token that allows you to span across different PSPs, have backups, retries, etc. At that stage, you need to build it yourself, or what I'd strongly suggest is pick a payment orchestration platform who can help you with it.
Yeah, awesome. Do you see this being, it's another question, do you see this being an opt-in for now and then soon, mandatory moving forward in the future?
I mean, generally, there's different ways these type of things are implemented. It's like carrot or stick, basically. So, I mean, to start with, and in some countries it's carrot, right? So they're offering you, a discount on your interchange if you do use it. In other markets like the US, this seems to be they're going stick. So if you don't use it, we're putting up your rates. So, I mean, look, how much your option here really is if you don't use it, you're going to be paying more money. And I strongly believe we're already paying enough money to use credit cards online. So anything that reduces that or keeps it low is definitely beneficial.
Yeah, they're like, I just think of it from the, specific example side. That's what people, always, they want to see. So if you're switching to network tokenization, are there specific examples that are out there? And then another question just comes in around, how do you know if it's right for me? Because you'd mentioned subscription based, which completely makes sense. Are there other scenarios as well? So we'd love to tackle kind of both of those, and we can break them apart for sure.
Yeah, let's start with the last one. So if you're only doing one-time transactions, there's not a huge amount of benefit for you. So if you're only doing a transaction that you take the money off that consumer once, you're never going to store that consumers' details, so you don't want an easy, quick checkout, then there's not a huge benefit for you as a merchant. But if you're doing anything that allows you to store that customer's details, you want them to have one-click checkout, click to pay, any of that stuff, then you really do need to be doing this. Because it's more efficient, and as we said, it's going to save on costs. Examples, there's some very big companies out there already using network tokens, and if you go onto the Visa or MasterCard websites, you can see their sort of role models, and they are the world's largest retailers already doing this.
So then from a size standpoint, it doesn't necessarily matter per se. It's just kind of more on, what type of product you're selling and the number of transactions.
Yeah, I mean, look, it's a cost thing. It's not really a size of company. It's not if you're a small company and you don't have the resource to do this, maybe it's you're fine paying more fees, right? But if you're a big company, then every penny counts. So you're trying to save costs constantly. Maybe there's more urgency at that point. But really, this is like, do you want to spend more or less money on this to make a better consumer experience?
Yeah. Awesome. I want to dig into just like best practices a little bit. This is something that's new. It's just started coming up with brands as a whole, and it does make sense. But I'd love to jump if you have any like best practices people should think about, consider things to consider when you're selecting, a partner in this space would be great as well.
Sure. So I think the first thing is don't go all in, right? So don't go all in to start with. So there's definitely some issuers, some countries that are behind the game here. So whatever you do, you need the sort of dual solution. So the ability to use a network token, and if that doesn't work, the ability to use a PSP token, raw PAN, or something like that, because in some cases a network token will fail. And then you'll need to fall back on a PAN. And then weirdly, in some cases, a PAN might fail, and if you try a network token, that might work. So you basically need both. So the best practice I would say is don't go all in. Don't say, I'm going to do everything on network tokens from day one, because you potentially could have some problems going forward. I think there is a few other best practices here. If you're accepting debit cards and you want to process debit cards through a debit card processor, then directly then you need to have the dual solution as well, because the debit cards aren't supported by the network tokenization standard.
Awesome. Are there like common questions that get fielded your way in this space? I mean, there's got to be a million, right?
Yeah, I mean, we often get asked, well, where should I use it? Where should I not use it? When should I use it? And really, look, that's a big ask manual. That's the truth. And it changes almost every day as issuers catch up, as certain banks come online, start doing better. You need a flexible system. And that's what I keep on saying to people. Don't build an inflexible solution. You need something that's going to allow you to fall back and move around as this evolves. And as they roll it out in different countries, you need the ability to say, should I use a network token in this country? Should I not? Should I use something else? So you need a very, very flexible solution. I think, in my view, and I'm very, very biased, a payment orchestration platform is the best way to do that.
Is there, are you walking people through that? Because I think that's got to be a big part of it on a daily basis right now, because I think people get it. I think they understand it. But that's different than knowing the complexities of rolling it out and the time frame, and where, like you're saying, where to use it, where not to use it. Is that an audit that's done? Is it even when you get up and running, is it a weekly meeting? Is it a bi-monthly audit to see what the changes need to be? Would love to hear something about that as well.
Yeah, look, I mean, I think the advantage of using an orchestration platform to do this is those changes don't need to be engineering changes. If you build this yourselves, you might need to be writing engineering changes in to say, look, for this market, now do start using network tokens. For this particular issue, start doing that. And that means you need to be updating bin tables, like which cards are good, which are not. That's a lot of work. So I think, the advantage of an orchestration platform is that's done for you. That the reports around that will tell you where tokens have failed and PANs have succeeded, or where PANs have failed and tokens have succeeded. So you'll get the updated data of what's working, and making a change should just literally be, changing to a configuration in a rule. And moving it to that model to give you the flexibility to move fast is far more important than pretty much anything else, because it is new, it is growing, but you do need flexibility, because if you build this statically, you're going to end up with some nasty surprises, sadly.
Yeah, and it's just interesting that this within probably next year to 18 months, you're saying it's going to be predominantly taking over. So
yes,
that number of people are just going to be left behind, like,
we're paying more money,
or
right?
pouring or paying more, right? But
Yeah.
I don't know how people can. I mean, as part of this as a whole is right. Is the number one thing I get from brands is overall profitability, right? E-commerce, direct consumer, website profitability is top of everybody's mind, and it's crazy. It's just, this is another spot where you're going to be paying more if you don't figure this out over the next year.
Yeah, and look, and it's always been the case with rolling out these new schemes. You had like chip and pin in Europe. People resisted for years, and then they realized liability shift made a big difference, so they had to move. And I think, look, generally people don't like things forced on them, but if there's a financial incentive, it helps.
Right. I mean, well, that's a big part of it too, is it's actually great for the consumer at the end of the day.
Absolutely.
Right. And it's a push in the right direction. And I think the best things are the ones we can relate as not only on the business side, but on the consumer side, and why there's going to be a gigantic push in this space. And you're going to figure it out. And if you're not going to figure out, then you're going to pay. And it does make sense, because it's a huge inconvenience. I think everybody in the call has probably had that exact your situation happen with some kind of product. And yes, you spend that so much, the most valuable thing that we have, which is our time, trying to go around and fix things. What's like the coolest stuff for you that's coming around the corner in regards to this space as a whole? Right. I mean, yeah, love to hear that.
I think I like the idea. I like what's going on with click to pay. So if you don't know what click to pay is, this is a new technology that the card companies are rolling out directly. Whereas if you go to a website and you start typing your credit card number, or you've been to that website before, instead of having to type any of this stuff in, what will pop up on the screen is, do you want to use this card? Because that's stored. And then you'll, just like an experience you'd have with one of the wallets, you'll be able to go click, done. Behind the scenes, that is using network tokenization, but it does mean that that's going to become a very easy consumer experience. Like, I see a world where hardly anyone will ever type a credit card number in again. And when you go and get your new card from your bank, they'll automatically register you into this process. So ultimately, that, no one likes paying for stuff. It's the worst bit of the shopping experience, right? So we can make that as invisible or as seamless as possible. Great. And then whether, we got it today with maybe Google Pay or Apple Pay, or maybe you don't like those products, but this will basically turn to a process where making a payment should be super simple and super easy.
Yeah, I mean, at the end, that makes me happy, makes the customer happy. Like,
exactly.
It's one of those interesting products where I don't think a lot of people understand the importance of it and where it's going. They don't understand the fact that it's going to be here no matter what. And so we need to figure it out. But that it makes everybody's life easier at the end of the day. And
it's a little bit of lift, but it's definitely the right thing to do.
I mean, it's a great spot to be in, right? That's if you're helping the end consumer as a whole. Any things, so we get the last couple minutes here, anything we didn't cover today that you thought would come up, either question wise or for the audience or anything like that, that normally comes up but didn't come up today?
Yeah, I think the account updater is one of them. So often one of the questions we get from merchants is, look, I already use account updater. Why do I need network tokenization? Account updater is technology that's been around for a little bit. And that's where you're basically, any stored card you have, you're able to get that card number updated if anything went wrong with it. It solves a little bit of the problem. It basically solves the problem. If the card got canceled, it gets updated in the system. It has notoriously been a little bit difficult to work with. It runs slightly delayed, but it doesn't really solve the core problem. And that there's one number out there that everybody has got stored that is actually very valuable to a consumer. So it doesn't solve that part of the problem. But I think to start with, you need to really be using account updater and network tokens as this, network tokens take over 100%.
Yeah. Awesome. This has been a fantastic conversation. Thanks people for sending in the questions as a whole. As we kind of wrap up here, I just want to remind everybody, if you have any follow-up questions, more than happy to connect you with John and the team over at Gravy. They're fantastic people, great friends, partners, supporters of the network as a whole. I'd love to have a follow-up conversation with you as well, see other pain points that are happening. And, with that, if there's not any more, if anybody has any last minute questions, you can drop them in the chat or the Q&A. But other than that, it's amazing how fast, 25, 26 minutes goes by. A quick thank you, John, for your time today. Thanks for the great conversation and all you guys are doing to help the brands of the network out. With that, we're going to wrap up this little webinar here. Everybody take care, stay safe, and look forward to having you at a future event.